A smart investor knows how to distinguish legitimate versus inaccurate sources of information online. And oh my God, is that so necessary? And can any of us distinguish legitimate versus inaccurate sources of information online? Like, have you even been on the internet this year? It's crazy out there. Welcome to Old Money, a show dedicated to helping you build the trust fund you wish you were born with. Ladies who lunch, listen up. Life is not about looking rich. I want you to build a life and a legacy that feels rich in every sense of the word. If you're ready to stack cash, talk shop, and trade insider secrets, you're in the right place. These are the new rules to old money, so let's get after it. Longtime listeners of the podcast know I'm obsessed with a few things: luxury, design, and my dog. I don't think you understand. I live for my dog Poppy, and giving her the richest life possible is why I'm working so hard. And to help me give Poppy the best life ever, I'm proud to introduce you to the sponsor of today's show, Le Dog. This brand is the perfect intersection of all the things I love: luxury, design, function, quality, and style. But don't take it from me. Le Dog has been featured in New York Times, on NBC, in Vice, Harper's Bazaar, and the Le Poop bag was named as the best pet parent gift by Women's Health. And I have to say, I agree. They're known for Le Bed, a stunning leather dog bed. It's odor and hair resistant, hypoallergenic, super easy to clean, durable, and has a cooling gel memory foam to help our pups regulate their temp, and a 6-inch orthopedic mattress to support their bones and joints. There's also the Le Mat, which is like the Le Bed's little sister. It's just super easy to roll up and travel with. And then there's my favorite, the Le Walk collection. It is iconic. We've been using the long line leash. It's a beautiful cognac leather. Poppy looks so good in it. And I wrap it around myself for a hands-free walk, which is great for multitasking. And of course, Poppy has the coordinating collar and Le Poop bag because, duh. I love companies that are committed to creating quality products that look good and last. That is a tenet of the Old Money shopping philosophy. The founder, Kristen, is a rich girl in our Old Money community. Her company is female-founded and Canadian-owned and operated. She designs and manufactures all of her own products. And this is the best part for me. She's also established a charitable initiative, so every purchase helps a dog in need. And the best news ever? She has generously offered 20% off site-wide for all listeners of Old Money with the code OMCC20. That's OMCC20, like Old Money Country Club, for 20% off site-wide at ledogcompany.com. The site is spelled LEDOG company.com. Use code OMCC20 for 20% off everything on the site. You can find more details in the show notes or on our website. And please, 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 tag me in your Old Money pups on Instagram. We want to see your dog living their richest life ever. Hello, rich girls and guys. Welcome back to Old Money, the podcast to help you build the trust fund you wish you were born with. I'm your host, Amber Frankusen, and I'm so excited about today's episode. I sound like a cringy influencer when you get on my Instagram stories. I'm so excited about this new product I've been trying. But honestly, no, I'm actually excited about this episode because I've been talking about it for, 3 months, and it's one of my most hotly requested topics. Today, we're talking about investing and if there is a shortcut to investing more easily. So we're breaking it all down today. Plus, I'm going to get into all the Robinhood tea so that you can sound super smart at your next dinner party. But before we get into that, let's do a little kiki, a little catch up. How y'all doing? How you doing? I've been pretty good. For the month of September, I've been so dialed with cash consciousness. I'm stoked. I mean, if you've been listening long, you know that this started as what I thought was going to be no spend September, which is totally unrealistic because we have to spend money to survive. And it led me into thinking, okay, if I'm going to go into this month and be super intentional, like how can we do this as a group? How can we do this as a team? Because I know I do so much better when I have accountability, when I have somebody doing a challenge along with me. So I put this challenge together and it has honestly opened my eyes to how much money I have been wasting this year. For example, I realized the other day that not once this month have I bought anything on Amazon. Normally, I walk into our building and I check for packages every single day because I normally have something to pick up. And I haven't done that in like 3 weeks. And I'm like, oh my God, what have I even been ordering? And I looked back and my average spend on Amazon, Target, whatever, is like $400 a month on God knows what. Sometimes it's tea, sometimes it's toothpaste, sometimes it's a side table. I don't know where it goes, but it's honestly just a convenience play. It's easy to order. It's going to come quickly. It's that dopamine hit. And I haven't ordered anything on Amazon this month. And I'm like, how much money am I saving this month? And what do I get to do with that money instead? That's been a huge eye opener for me. Also, just being really prudent about going to the grocery store and planning out what I'm going to eat. All that it takes is having a plan in place, right? And of course, we've ordered in a few times too. We're not doing this because we can't afford it. We're doing this as a challenge, right? To see what we can do when we address our habits and get out of this just emotional overspending, this convenience play spending. And it's been so enlightening. But there's something else that happened that has been honestly the biggest, most abundant thing that has ever happened to me in my life. In my entire life happened this month, because as a part of the Cash Consciousness program, I laid out 30 days of emails to support us in cleaning shit up, right? Like there's everything in there from how to call your credit card company and negotiate for a lower APR or a higher credit limit, which you can do, by the way. In fact, if you have a Discover card, I've heard some stories recently of people getting their interest rate lowered from like 25% to 9.99 APR. So call your credit card companies, do the exercises, but it's also cleaning out our closets and making sure that we're taking care of our emotional needs with money and doing journaling. And one of the things that I've been doing this month is just going through all of those ticky-tacky little tasks, like calling my insurance company and figuring out where my reimbursements are and all these different things. And one of the things that I had sitting on my desk for months was the renewal for our dog Poppy's dog license. You know, like the registration thing, right? When your dog gets lost, it's how they keep track of the phone number on file, microchip, et cetera. And I knew we needed to get her vaccines up to date. So that was on my to-do list this month. We took care of that. And I also needed to send in that registration and pay for a new tag or whatever. So just a little bit of backstory. I know that our dog is microchipped because I rescued her in 2020. And when I rescued her, they told me, based on her teeth, that they estimated her age to be at about 4 years old. And she was microchipped. She was found hit by a car on a military base. And she had been apparently living in the hills for weeks because they called the number on the microchip, and the people that were registered to her had left base and they had abandoned her, and they said that they were not coming to pick her up, which is, by the grace of God, how this little angel came into my life. And I adopted her in May of 2020. And as you know, the rest is history. She's my soulmate, best friends forever, all that kind of good stuff. So I go to do her registration online, and one of the fields on the form is, what's your dog's microchip number? And I said, oh my gosh, I don't have that anywhere. I should call and figure out what it is. So I called a couple of vets. I had to call like 3 vets ago before we had moved. And they said, oh yeah, we have her microchip number. So here it is. And then I decide, I wonder if I can look this up anywhere. So sure enough, I plug that little microchip number into Google, and what comes up but her original registration with a photo of her in somebody else's car. And you can see the original owners, like the corner of their glasses are showing in this picture. She's all matted, like under her neck, like chin area. And it has her original birthday on this piece of registration online. And her original birthday actually puts her at 2 years younger than what they quoted me when I picked her up. I got an extra, it's truthfully like 1 3/4 year, but I got an extra 1 3/4 year added to my dog's life because I cleaned up my shit and took care of the paperwork and got organized. And I am telling you, I sobbed when I saw that, because if you know me and how obsessed I am with Poppy, I'm the type of person that cries over my dog dying while my dog is still alive. Like, I'm unwell. But it was honestly 100% exactly why I needed to do this challenge this month of like, get your shit together, get it right, get it straight, because the abundance does show up, and it's not always as straightforward as money in your bank account. It's what happens when you take care of your life. Things start to go your way, and there is no amount of money that could ever equal the value of having my dog be 1 3/4 years younger than she is, because that to me tells me that I get more time with her than I had originally planned. Oh, I'm going to be emotional. But honestly, this month has just been great for me to buckle down and really get back in line with my own goals and saving a lot of money So put it towards something that really, really matters to me. The poppy thing was a total bonus. But just to go back into this conversation about investing, as a part of this exercise, I've really done a lot of thinking about how can we make money more simple? Because I think that's what we all want. Because honestly, the truth of it is super wealthy people or people that are financially free, they're not checking their pocketbooks every 5 seconds. They're not worrying about every single dollar that comes in and out of their account. They have systems in place. They are looking for ways to make things easy. And that is true money freedom, where it's not managing you, you manage it on your own time. I was at a good place for many years where I spent maybe an hour and a half per month going through all of my expenses, rebalancing my investments, making sure everything was tracking in the right direction. And it was. You guys, if you've listened to the podcast, you know why this year I got a little wonky, off balance, and I needed to go back into these more regular money dates so that I was more in tune with what I was spending and why. But ideally, I need to correct that imbalance again from that kind of bottom of the pyramid foundation, right? Like my lifestyle, my habits. My habits totally got skewed this year. So this exercise this month is helping me reset my habits, making sure that I'm living within my means and spending and investing the amount that I want to. And then above that, right, we really focus on creating even more income. I have, because of cash consciousness, and sorry, this sounds like a freaking sales pitch. It's not. I'm just telling you my experience. Cash consciousness was just a free thing I did for the community in September. There's like 100 people that were in it. It's super valuable. So I will repackage it and it will be available for you to join again with different terms, but I'm just telling you my experience. And my experience was this. It's like I got focused again on my finances and what I wanted to create. So I went and sold like crazy. And I think I've sent 13 proposals for our business this month. I've signed 4 new contracts. Like when you focus and you do the one thing, you can get results. And so I'm creating more income. But on top of that, as you go up this pyramid from the lifestyle habits at the bottom, the curing your financial fight or flight, then going into creating lots of value, what do you do with your money? You want to keep it, right? You want to grow it. You want to grow it. And one of the ways to grow it is through investing. And there's a whole bunch of different ways to invest. You can invest in businesses. You can invest in assets. You can invest in homes. You can invest in stocks. You can invest in bonds. You can invest in gold. You can invest in Hermes bags. You do you, boo. But the purpose of this conversation is to really talk about the big, bad, scary stock market, because I think a lot of us are pretty intimidated by the stock market and we're looking for an easy way to enter. And I think especially in today's day and age, we're all on our phones. I'm addicted to mine. We're all programmed to think like that incredible ad campaign taught us so many years ago. There must be an app for that. And there are so many investing apps, and there are so many ways to lose money playing in them. So today I want to explore the landscape of investing online, investing on your phone, the apps, so to speak, right? Because I think we all think that the apps are for beginners or they're going to be easier, but is that really true? Well, my job is to do the research and hopefully present it in the most unbiased way possible. Remember, this is not financial advice and I am not your financial advisor. And I do not have your numbers in front of me. In fact, really interesting message as we go into October. The first week of October is World Investor Week, which is what I like to call a social media holiday. I've never heard of this before. I'm sure this group is doing a really good job. In fact, I really like their information. But if it wasn't for the very talented Madison on my team, I would have no idea about this because I've never heard about it before. Maybe I'm out of the loop. But World Investor Week, it's put on by the IOSCO. I don't know who they are, but they have some good information in here. And honestly, it's a program, it's a conference or whatever, but they have some key messages, especially as it relates to technology and digital finance that they're talking about in this year's programming. And one of the things that it says on here is how to be a smart investor. Here's a couple bullet points from this, right? A smart investor knows how to distinguish legitimate versus inaccurate sources of information online. And oh my God, is that so necessary? And can any of us distinguish legitimate versus inaccurate sources of information online? Like, have you even been on the internet this year? It's crazy out there. And the next point says, understands that finfluencers, very funny, financial influencers, can have conflicts of interest and might receive payment for the investment opportunities they promote online. This is 100% such an issue and something I'm going to get into today that's happened to me. And also understands that social media influencers cannot know the personal circumstances of their followers, so their recommendations could be unsuitable. That's why I say things like, I don't like the 30, 50, 20 budgeting rule, for example, because who knows what your personal situation is? Who knows if you have kids, have an unsafe living environment, live in a high cost of living area, are paying off student loan debt. It's just, there's so many variables out there that it's really hard to paint with the broad brush. The other thing that it says on this page is understands how to use digital tools that can help with their finances and knows that these tools do not prevent loss or fraud, and they must continue to conduct independent, thorough research on every investment opportunity, which brings me to today. We need to start by talking about Robinhood, but before we can even talk about Robinhood, I'm going to give you the playbook for all of the pieces that you need to know. You know, this girl, me right here, this one, I don't shut up about financial fight or flight. You're like, girl, get a new shtick. But I can't stop talking about it because still I hear people say that, no, there's no emotion in money. This is just business. Money is neutral. Money doesn't have any emotion. You shouldn't have any emotion about money. And I don't know if they're not human, but I'm very human and I have a lot of emotions around money. But it wasn't until I started researching for this podcast a year and a half ago when I started to really understand how entwined our emotions are with money. And what does this have to do with Robinhood? What does this have to do with day trading? You have to remember that our brains are wired to avoid pain and seek pleasure. That's why we impulsively shop. That's why we try to make ourselves feel better by ordering on Revolve or DoorDash or whatever it is. But when we are looking for something that is immediately rewarding, we aren't always using the frontal lobe portion of our brain, the one that's responsible for smart decision-making, the amygdala. When we are looking at systems like Robinhood, Robinhood is designed to play with your dopamine and get you to react in certain ways so that you will use their app more. Think about it this way. Why does it feel so good when you see your stocks go up? It's because it's a neurotransmitter in your brain that gives you a drop of dopamine. That's that pleasure center, right? And when you are gambling, for example, you get that rush, that adrenaline. When you have dopamine, adrenaline, and cortisol flooding through your body, it hijacks your amygdala and it doesn't allow you to make the most conscious, clear decisions that you would typically make. And just the same way it feels good to see our stocks go up or our bank accounts go up and how that gives us dopamine. Think about when you're on Instagram and you post a fire selfie, babe, and your crush is double tapping that, those likes are going up, or you posted something so hilarious on TikTok and you got out of 300 view jail, then you got out of 700 view jail, and then you broke 1,000 views and you are feeling good. It is giving you immediate gratification that you've done something good. Well, Robinhood was designed the exact same way. What is Robinhood? Robinhood is a commission-free trading app, and it got really popular because its whole point was to democratize investing and make it available for everyone. So they had no account minimums and, like I said, commission-free trades. So you could trade, buy and sell stocks without paying a commission to Robinhood. And the other thing is that they would also offer fractional shares of companies. So if you wanted to buy Amazon and the stock price is $900 and you don't have $900, well, they would allow you to buy 1/10 of Amazon for $90 or whatever that math works out to be. So in theory, it was a good idea, right? Robinhood, just like the Disney movie or the old story where he steals from the rich to give to the poor. The idea of the app was, let's give the everyday person an opportunity to participate in building their wealth through our app. Now, you might have heard about this company because of all the drama they got into. Just rolling back the clock a couple years when everyone was like a Bitcoin millionaire and had NFTs and meme stocks were big. There was a whole run up, and I'm not going to go into the whole story, but essentially a group of Reddit users were manipulating the market. I don't want to say it was unfair. It just had never been done before. And they were doing a run on GameStop stock. And that's actually really hard to say. GameStop stock, you know what I'm trying to say. And during a particularly volatile day, Robinhood actually decided to freeze trading of GameStop and restrict buying due to the volatile stock price. And so everybody's like, what's going on, Robinhood? You thought you were going to give the opportunity to the little guy, and then here you go doing market manipulation. But there's way more to the story because this was actually a required move due to the regulatory capital requirements of Robinhood even existing. It's like they agreed to these rules when they signed up to be the Robinhood app, and what was happening with GameStop put their company in such bad leveraged position because of the clearinghouses and the amount of money that they had to cover the particular trades, which they just didn't have. They had to halt the trading. So it was 100% needed for them to do that as per SEC requirements. The quote is literally like, it's non-negotiable for Robinhood to comply with the financial requirements in the clearinghouse deposits. So because something that had never happened in the market before, it was like a black swan event. That's what they call something that's never happened before. Like the pandemic was a black swan event. GameStop was like a black swan event. Nobody had been prepared for this before. So they were unprepared. So yes, Reddit users manipulated the market, and then Robinhood had to manipulate it right back. And that's not even why I have a problem with Robinhood. The reason I have a problem with Robinhood is because they've completely gamified the experience of investing. And I am very anti-gambling. I am very much about being aware of the emotional triggers that happen to us. But why do you think people get sucked into slot machines in Las Vegas and sit there with flashing lights and ding, ding, dings and buttons to press? It's no different than when we were babies. If you have babies, maybe they like to play with your wallet or your keys, something that's jingly or jangly. I used to love to press buttons in cars when I was a kid. That is literally such a core, enjoyable thing to do as a human being. And Robinhood was originally hugely designed to really influence the way that people interacted with the app through the process of gamification. And that's where it borders on manipulative and misleading. Essentially, what that means is that the investment app was made to look more intuitive or exciting or visually appealing. And it did a lot of things that really encouraged people to continue to want to trade on the app. The first one, the biggest red flag, was this reward animation, as they call it. You know, when you go on Instagram or you send somebody a happy birthday text and then you get the text and all the balloons fly or the confetti, say congratulations, and the confetti explodes. Well, that would happen every time you would trade on Robinhood. Confetti would go poof after every single trade, which kind of reinforces that every single trade is something to celebrate. Let me do that again. Let me do it more. And I mentioned to you earlier that Robinhood does not make a commission on its trades, but instead the way that it makes money is through what's called an order flow model. I would have to do a whole nother episode just to explain this, but essentially they're still making a commission. It's just coming from a middleman, not from you directly. In addition, Robinhood would make money through rebates, through margin interest, through stock loans, uninvested cash, and cash management, which grows and makes more money for them when you put money into the app and when they host more daily trading activity. So when they're gamifying your experience, they're making it feel like you're doing something worth celebrating for your own financial future. You should actually be celebrating Robinhood's financial future because it's like the more you play, the more they earn. So it's almost a little bit manipulative, right? So it's what allows them to offer commission-free trading, but it's almost a conflict of interest because it incentivizes people to maximize their trading volume, therefore maximizing their profit. So they used gamification to keep you engaged in the app. It's the same way that TikTok keeps you on the app. It's the same way that when you scroll, it's dopamine, dopamine, dopamine. Or think about if you've ever been on a dating app. When you get a like or they give you all these people that are interested in you right when you first sign up on the dating app, there's no better dopamine, right? But the same way they need to put warning labels on people that you might want to date online. They weren't doing that on Robinhood with stocks either. So that was another really big issue, is that there's just inadequate information about what you're buying. The financial markets are highly regulated for a reason. And the way that Robinhood packaged everything up in a very nice little package made it look very achievable for you to understand what was going on, but it might not have all of the information that's there. I'm one of those people that does read the terms and conditions every once in a while, but the reality is that there's just not all the information that you need right there in the app. It just simplified everything a little bit too much. In addition, another thing they did to gamify is they made a lot of emphasis on trending stocks. So just the same way that you would see the bestseller section on Revolve, they also had a bestseller section on Robinhood. And it was just based on what everybody else was buying, or they would highlight stocks that had really high price swings, positive or negative. And it kind of felt like a game. So they would give you these lists, and there's nothing on this list that shows that this is a good investment for you. In fact, they were often showing the most overbought stocks. So they were almost giving you bad picks right there. They're just telling you what everybody else is buying. But if everybody else is buying, like, should you be buying too? I don't know. So it makes it really easy to influence people. And it also probably led them down not always the best path because there wasn't all of the financial disclosure or all of the information. And even worse, in addition, they had lotteries. They always had a lottery. That feels like gambling to me. In fact, when you signed up for Robinhood, and I think Coinbase at a time too, I might be wrong on Coinbase, but I know for sure on Robinhood, you sign up and they would give you like a free share of stock. I think I got a share of DraftKings stock or something when I signed up many, many moons ago. And while that feels weird, there were also these random lottery giveaways. Like I know there was one in this article it references here. On Coinbase, they were doing a giveaway of $500,000 in prizes to 8 lucky winners. To enter into the sweepstakes, all you have to do is execute a trade worth $100 or more. So they're encouraging trading, which is kind of problematic, and it encourages you to make more trades so that they can make more money. It's just not great. And the last thing, of course, is that it targets younger investors. Now, I'm all about investing early, but this can be seen as a predatory financial tactic. You're going after a vulnerable group, right? Here's this app. It's giving me confetti every time I make a trade. I don't know what an option is. I'm going to try to buy an option. I don't have all the financial disclosures. And then whoops, I'm accidentally in the hole by $30,000. With young people, when they don't have all of the information and they have something that's just as easy as clicking buy from this list, even though it's probably not a good investment, it just feels manipulative. So it's the gamification situation that I have a really big problem with, because I think it's so easy to get caught up in that financial fight or flight or that financial excitement, that dopamine hit. The same way when you get, I don't know what they do. I think they do roses on Hinge now. It's been a while since I've been on any dating apps, but you know how good that feels when you get that reinforcement, that like, and just think about getting that with your money. Like you're doing something good. You're doing something good. Keep doing it. But is it really, really good? So we really have to protect ourselves from manipulation and marketing tactics and gamification. The first way to do that, obviously, is to educate ourselves. That's what I really wanted this podcast episode to be. Like we want to stay away from temptation. A really good example of this is cryptocurrency. Everybody jumped on the crypto train. I did too. I have a couple of bucks invested in crypto, but do I really, really understand the market? No, but I'm, diversified. I can lose that money if I lose it. If it grows, it's great. But it's not money that I'm hinging on. It's such a minuscule percentage of my portfolio. I just have some skin in the game. So staying away from hype or, fast action. If you see something like the market plummets and you feel like you need to panic sell, that's what you don't want to do. You want to play responsibly with your portfolio. And so staying educated is number one on the apps themselves and what they're doing. But also you want to follow a long-term sustainable strategy that you can stick with and it'll grow over time. Warren Buffett has a quote that's something like, the stock market transfers money from the impatient to the patient. So staying away from day trading, staying away from things that are going to spike your dopamine, spike your cortisol, and getting into a long-term investment strategy is what I believe to be a responsible way to invest. So where do I go to do that? There are a whole bunch of different brokerages out there where you can open a brokerage account where you can put some money in and you can buy and trade stocks, mutual funds, index funds, ETFs, all the things, right? But now there's all these apps, and all these apps are out there marketing to us, telling us that they are the best way for us to invest easily online. Now, there's a whole bunch of different brokerages out there. There's TD Ameritrade, Fidelity, Charles Schwab, good old Chuck. There's, Vanguard. There's E-Trade, all these different programs. They're all websites where you can go like a bank, you can set up a brokerage account and make your trades. If you log on to any of these programs, you'll notice they're very, very complicated. There is a lot of tabs, there's a lot of information, and it's cumbersome because these are used for every level of investor, very advanced investors and very new investors. So it has all the bells and whistles. It's kind of like these brokerages are full-on aircrafts. They are like a Boeing 737, and all you want to do is you want to get in, put on your seatbelt, and arrive at the destination, which is wealthy, right? But when you get into these programs, sometimes you're like, where the fuck do I even turn on this plane? Like, does it have a key? That's what it feels like. It's so overwhelming. And I think that's one of the reasons why these apps are so attractive, because they are so simplified and they make it look so easy. But the thing is, a lot of the apps that you're hearing about, these investing apps, those investing apps are what are called robo-advisors. And robo-advisors essentially use AI, and I'm putting that in quotes, I know you can't see me, but AI to automatically create and manage your investment portfolio by asking you questions. Okay. That's the AI. The AI is like a quiz. Like, remember when you would get a Cosmopolitan magazine, at the back of the magazine, they'd say, what type of blonde are you? Are you a Brittany, a Christina, or a Jessica Simpson? And you would take that quiz. That is essentially what a robo-advisor is doing. It's asking you a series of questions, including how old are you, what is your income, and what is your risk tolerance? And then I'm going to create a perfect portfolio to put your money in every single month so you don't have to think about it. Some of these apps you might have heard of. I'll give you a couple names like Betterment, Wealthfront, Acorns, Ellevest, and even some of the more traditional brokerages like Fidelity and Vanguard. They have digital advisors within them as options. So you can do a robo-advisor through those programs as well. So are they good? Are they bad? Well, let's talk about it, because there's a lot of things to consider. Number one, the fees. Typically, robo-advisors are cheaper than a live financial advisor, but it doesn't mean that they're cheap. So we have fees to look out for, as always, and taking us back to our episode about financial advisors. The same thing applies even with a robo-advisor. We have to look out for the fees. We also have to look out for what are they giving you as an option to invest into. Some robo-advisors, for example, don't allow you to invest in index funds or certain mutual funds or whatever else. So they say that this is all AI generated or it's automatic, right? Because a robo-advisor is automated financial advice that provides an algorithm-driven wealth management plan with little to no human interaction. But who programmed that automated financial advisor? So who programmed what funds you're going to get put into if you're a 34-year-old woman who works in tech in San Francisco or a 65-year-old woman who lives on a farm in Arkansas? There are different funds that it's going to give you. So just to make it really plain, if you put the same amount of money, you fill out the form in the same way on Betterment, Wealthfront, Fidelity, and Ellevest, you're going to have different returns from the same amount of money that you invested, not just due to the fees of the different companies, but due to the funds they automatically put you into. Does that make sense? So Ellevest, for example, maybe they, because they're a women's-based fund, and I'll get into some of the nitty-gritty of this in a minute, maybe they say, well, because we're a women's investing fund, we're only going to have you invest in companies that are 80% or more women. And then that eliminates your investing. That's totally made up, by the way. They don't do that. And I don't know what their investing criteria is, but this is just an example. But my point is, maybe they have some criteria of what good funds are, and that's different than what Betterment is, or it's different than what Acorns has, because it's all different algorithms that are all developed by these companies individually. It's not just there's one big algorithm and you're going to get the same result anyway. So you really have to look out for what investment options are available to you. Obviously, you want to have good usability, good user interface, and you also want to have account options. Like, you want to make sure that you're being able to invest in both taxable and tax advantaged accounts. So what I mean by that is a brokerage, like fund money that you're trading to grow your wealth, and also your Roth IRA or your traditional IRA or whatever retirement account that you're trading within. So you want to make sure that it has the right options for you. So what are the pros and cons of them each? Well, I'm not going to go through every single one of them, but I think it's worth talking about what people like and don't like about this. Now, remember, this is not financial advice. This is information I've scrubbed from the internet to see what everybody really thinks about these apps out there. And the first one, the one that I hear the most about is Wealthfront. In fact, I used to have an account with Wealthfront, but I ended up closing it and moving all of my money into one more manageable place. I'll get to that later. But the reason that people like Wealthfront is that they do have customer bonuses when you first open an account. So you can get a little bonus of an extra 50 or $100. You have low ETF expense ratios. You have daily tax loss harvesting. That's really important. Tax loss harvesting is when you have, okay, so let's make an example. Let's say you have one stock that's performing really well and you make a profit on it. You make a profit of $5, okay? You have to pay taxes on the $5 that you earned in the stock market. You have to pay income tax on it. But you have this other stock, it's kind of taken a shit and you lost money on it. Let's say you bought it at $10 and now it's worth $7. So you lost $3. So on the first one, you made $5. On the second one, you lost $3. To find what your taxable gain is, you subtract how much you lost from what you earned. So 5 minus 3 equals 2, right? So instead of paying taxes on the $5, you're only paying taxes on $2. So you're saving money on your taxes because you sold one stock at a profit for 5 and one at a loss of 3. So you're only paying taxes on $2. Does that make sense to you? So what happens with tax loss harvesting is that automatically gets done in your account so that you have less of an impact on your taxes. Now, when I'm talking about it in $3 and $2, you're like, big fucking deal. But what happens when this amount is $500,000 of profit and a $300,000 loss? It's a much bigger deal because there's much bigger impact. So tax loss harvesting is really important, and it's one of the reasons why people really like Wealthfront. The reason they don't like Wealthfront is because they have what they consider to be a high account minimum, $500. You have to have a minimum of $500 invested to play in Wealthfront. And they also have a 0.25% management fee. Okay. That's low-ish. It's low-ish. It's a management fee based on a percentage of money that you have invested. Other reasons why people really like Wealthfront is because they have good financial advice and automated investment management that's good for helping you plan how to diversify, how to, do tax optimization strategies. And they also have a stock investing account because they're not just a robo-advisor. You can also manage your own portfolio and do what they call DIY investing, which is rare in these types of instances. So Wealthfront, you can kind of do the robo-advisor and also do your own thing so that you can access things like ETFs and REITs if you want to choose your own investments. So another app that is always compared with Wealthfront is Betterment, MENT. And from what I've gleaned from both Bankrate and NerdWallet and the users on Reddit, Betterment's actually really competitive right now. People like the user experience more than Wealthfront, and they also really like that you can have a little bit more flexibility within Betterment. Betterment allows lower recurring deposits than Wealthfront. I think Wealthfront, you have to do at least $100 each time. But if you wanted to do $10 weekly, you could totally do that with Betterment. Also, in that same vein, they have a $0 account minimum. You need $10 to start, but that's very different than the $500 account minimum you need for Wealthfront. So this is a little bit more accessible to especially new investors. Again, these are all robo-investors. So there is a fee that's associated with this. You pay either $4 a month if you're under a $20,000 balance. And if you're over a $20,000 balance, you would pay 0.25%. So it's comparable to Wealthfront. $4 a month is pretty low. And they also have a 1% match of your net Roth and traditional IRA contributions until December of 2024. This is not an ad. I'm just reading this right off of NerdWallet so that you can have all the information. I want to give you the most unbiased information. I don't have much to say on Betterment because I've never used this particular platform. But this next one I did play with because I got caught up in the marketing. I think this is really good marketing. It's for Acorns. And like how a squirrel saves its acorns so that it can get through the winter. I thought it was really, really smart and really cute. And they're also the first place that I heard of using roundups to invest. And what that means is that when you make a purchase on a debit or credit card, it rounds up your purchase to the nearest dollar, investing the difference on your behalf. So to give you an idea, you go to Starbucks, your drink is $5.45. It rounds that up to $6 and it takes that 55 cents and it stashes it away and invests it for you in the robo-advisor. So I thought that was pretty interesting, which is why I initially started it. But I ended up, like I said, consolidating how I was investing my money and moved everything into my other accounts. So I did end up closing this account, but it is really interesting because they target millennial and younger investors, and I totally got hooked by the marketing. So it works, right? So they also do some investing tools for kids, like Acorns Early, they call it. And the fast facts on Acorns is that there's no account minimum here. There are different fee structures. You can get $3, $5, or $9 subscriptions per month. The assets that they invest in for you are ETFs, including a Bitcoin linked ETF. And they can do all different types of accounts: taxable, retirement, cash management, custodial for your kids. So I think this is an interesting one to look into because it's intuitive. It has smart design, no minimums, and they will also run a bonus right now. You can get $40 to your account when you make your first investment. So the roundup feature is the thing that I think is really interesting because it kind of forces you. But at the same time, my philosophy on this is being really intentional and conscious about all of my money. So this is kind of an extra. It shouldn't be your main source of how to invest is just by banking on rounding up on your Starbucks drinks to become a millionaire. It doesn't work that way. The last one I want to talk about, and this is not a comprehensive list of all robo-advisors. It's just a few I want to talk about today. But this one I was emotionally invested in because this is the one that I thought was going to be my pick. Because I'm a sucker for branding and marketing, and this was the one. Ellevest. It was the one targeted to women. So it was the one for me. I was so convinced that Ellevest was going to be exactly where I wanted to put my money because I loved their mission and I wanted to be a part of their investment platform because they were targeted towards women like me. And I did have money in Ellevest and I did take it out. And I want to talk about it because, again, I'm a sucker for marketing. We all are, right? But this is a really interesting option because you're actually paying a premium to be in the Ellevest platform. The fees are $12 per month. So that's pretty high if you are a new investor. If you have $100 invested, you're paying $12 per month, 12% per month to have your robo-advisor here. The other thing, and this is so interesting because on nerdwallet.com, they put this in the pro category, but this is a con for me. The pro category says portfolio mix that factors women's needs. What does that mean? I don't understand how a portfolio is targeted to either men or women. All of us are looking to make money, and I don't want to have a curated list of opportunities to invest in because I'm a woman. I'm focused on performance. So with that, plus no tax loss harvesting, not my favorite option. And again, this is not financial advice. This is just my opinion. Interestingly enough, I did some research on Reddit where all of the true stories are told. And pretty overwhelmingly on Reddit, people report that they had not great returns on Ellevest. This one user says their Ellevest has seen a 13.46 return overall, but their Betterment account has seen a cumulative return of 34.9%. So that's just a user on Reddit, but that was also my experience. I kept looking at my account being like, why is this not growing? And it just didn't grow. And I just kept paying the fees. So I moved all of my money out of all of the robo-advisor apps and into my regular brokerage. So these are some of the robo-advisors, but that is not all of the investment opportunities available on Apple's App Store. There are plenty, and they're not just robo-advisors like Robinhood, for example. That's something where you DIY, you pick what you want to invest in. It doesn't automatically do it for you. There's also Vanguard and Fidelity and Charles Schwab and Coinbase and all these other apps. But there's also some apps out there that I'm not a big fan of, but I'm not going to name names, but I am going to spill some tea. There was an app that reached out to me aggressively to advertise on this show. And they said that they had the best investment app for our audience and that I should promote it. And I did 1 minute of research and I said, over my dead body. The product itself was encouraging people to invest their solo IRAs or 401ks into alternative investments. Some of the investment options that they offer are real estate, syndicates, single family, multifamily real estate, cryptocurrency. And the phraseology on the website is all of the upside, none of the tax headaches. They also encourage you to invest in precious metals, peer-to-peer loans, make a loan using your IRA and payments go right back to your IRA, small businesses and startups, and private equity. So they're asking you to take your retirement fund and put them into items that have no track history. There's very little information about all of these investment sources on this website. And in addition, they also have advertising on their site about when you open a 401k with them. They say, don't worry, you can borrow money up to $50,000 from your 401k and pay it back over time. So they're asking you already not to invest in your retirement, not to use this tax advantage account, but to borrow against it or to invest in very high risk opportunities. So that is not something that I would feel comfortable putting my money into. So I would never advertise that to the old money community. And I've gotten a lot of interesting inquiries like that over time. And the reality is that I feel like I don't have any fiduciary duty, but I'm just here to give all of the information and do my best to share things with you that are informational and helpful. And when I think of informational and helpful, it's about investing in strategies that have been proven over historical data to perform. Things like the S&P 500, which has a return over time since its inception, right? And we talk about the bogglehead method of investing, which is basically like set it and forget it, and looking at index funds as a way to do that. What I said about Warren Buffett, the stock market is here to transfer money from the impatient to the patient, meaning the day traders typically lose money. The day traders are gambling at times, and Robinhood, things like that are out there that are promising a get rich quick scheme, they're not always designed in your favor. So all of this to say, we need to invest. Investing is one of the most important things we need to learn how to do with our money is help it grow, be a good steward of it. And to do that, we have to invest it. So these apps might be an entry-level way for you to learn and play and figure out what it is you're doing, what you feel comfortable with. I really like, again, bankrate.com and NerdWallet. That's where I get a lot of the information that I present to you. It'll break down the fees, the pros, the cons. And what I want to say is if there's something out there that's going to help you get started, do it. As I mentioned to you, I had an account with Ellevest. I had an account with Wealthfront. I had an account with Acorns. I've played with all of these different programs. I have a Robinhood account. I have a Coinbase account. I have multiple brokerage accounts because I'm trying to figure out what works best for me. And now over time, I have figured it out. My system is seamless. And the system that I put in place is the same one that I talked about since the beginning of Old Money podcast episodes. It is having your money flow automatically to your savings, flow automatically and automatically invest into your investment accounts, making sure that you're controlling your financial fight or flight so you live below your means so you have that money to invest for future you. Because there's nothing better than yesterday. I remember I was sitting on the couch. I had such a hellish day yesterday. It was the end of the day. I was totally wiped. I looked at our portfolio. I opened an app on my phone and I was like, hey, Jay, we made a couple grand today in our portfolio for doing absolutely nothing. Absolutely nothing. And we made a couple $1,000s. And that's how easily money can flow to you when you have it set up in a system where it can grow. Remember, currency is a current. It's supposed to move. It's supposed to flow. Money needs to move and it needs to grow. To be a good steward of your money, you have to put it into a vehicle where it can. And this intro to the apps might be a good place for you to get started. So let me know if this episode was helpful to you. If you're going to invest in any of the apps, please let me know. I'd love to know what you guys are up to. And this is not going to be the last time we talk about investing. I think 2025 is going to be crazy. I know everybody that's listening wants to learn more. And let me leave you with one more thought about investing. I think there might be a lot of people that are intimidated by investing or scared of it. Not just because the systems and the processes and the websites are so complicated, convoluted, there's so many things to learn. It's because people are afraid of losing money. And no matter where you invest, whether you invest on a robo-advisor, if you DIY it, if you're on Vanguard or Chuck Schwab or whatever it might be, there's no guarantee that you're not going to lose money. That is the thing. And I don't say this to discourage you. I say this to be really real with you. If we take a look at what is happening in the economy right now, we're on the cusp of another election. And right now, the debt that America carries, there's so much debt. Like we talk about being in credit card debt. Your girl America is in a fuck ton of credit card debt. And the interest payments are so much that the taxpayer dollars can barely even cover interest. Not to mention we're spending like crazy on wars. We're doing all these things. There's, a whole movement of people who are saying that the dollar is so unstabilized that all of these big investment banks are moving over to making ETFs of crypto. And that's true. We've seen a huge movement from this messaging that crypto is evil and Bitcoin's never going to work from powers that be in finance, all the leaders in finance, all the big banks, they all said, don't do Bitcoin. It's for criminals, right? And now they've all put a bunch of money in there and there's a ton of ETFs that they're all invested in because their customers want to be exposed to crypto. And there's some people out there that say that they're moving that way because they think that's going to be the new gold standard, so to speak, of currency in America. There's so many ways to look at it, but nobody can predict the future. So don't even waste your energy trying to try. You know what I mean? And whether or not we go into a recession in 2025 and 2026, or if crypto is the new gold standard or whatever happens, over time, if you believe in the United States of America being a powerhouse in this world, in this economy, then if they go down, they'll come back up again. So it doesn't matter where you invest, the same risk applies. And this is not financial advice. This is just your friendly reminder. But I would ask yourself this: are you going to play the game or are you going to be too scared? And that answer might differ based on where you are. If you're nearing retirement, maybe you're not ready to take the risk of the market tanking in 2025. I totally get that. And it's also not smart to say, well, what are the wealthiest people in the world doing? Because the wealthiest people in the world are playing a similar game to us, but very, very different. And if we're just going to panic sell if they panic sell, well, that's not a good way to calm our own financial fight or flight. You need to figure out what's good for you and for your family at all times. And by being here listening to this episode, you are doing that. You are staying educated because always learning is the biggest part of this game. So I appreciate you being here so, so much. However, the month of October is what we're looking forward to first. I have so many incredible people lined up to speak to you, especially about entrepreneurship. Next week's episode is going to dive into one of the questions I get asked so much: how and why did I start my business? What the hell am I doing? And I'm going to break it all down for you. And we're going to talk about one of the most valuable ways to create value, which is starting a business and then what to do with it. Now, entrepreneurship is not for everyone, but if you're not an entrepreneur, I still have a major way for you to benefit off of being involved in small businesses. And this is not a get rich quick scheme. This is just a new way for you to look at opportunities. So I am so excited to get into it. I love you guys so, so much. Let me know what you thought about this episode. Send me a DM at Old Money Podcast, and I will talk to you on the next one. Bye-bye. Feeling rich? I hope so. Thank you for joining me on this episode of Old Money. If you have questions you want answered, email me at oldmoneypodcast@gmail.com or hit us up on social. We are at Old Money Podcast, and I am at your service. If this episode spoke to you, inspired you, helped you, if you took a single note, it would mean the world to me if you could please just take a minute to rate and review the podcast. And if you're not doing so already, subscribe. And if you have friends who like getting rich, please share this episode with them, even if it's just on your Instagram story. And I'd love you more than Jeff Bezos loves Amazon Prime. Thank you so much, and I will talk to you on the next episode. Remember, I'm not your lawyer, I'm not your tax professional, and I'm not your financial advisor. The content presented in this podcast is intended to entertain, educate, inspire, and support listeners in their personal and professional development and does not constitute business, financial, or legal advice. In addition to that, this episode may contain paid endorsements and advertisements for products and services.